When I was at Pipex, one similarity in terms of not necessarily being customer focused and what was happening in the industry at the time is that we would be really focused on trying to sell you antivirus software and sort of value adds and so on during this race to the bottom of price. And sort of when Carphone Warehouse came out and said, you know, free broadband, what do you do? So there are some parallels, but where I think the analogy breaks down is that, unfortunately, we've seen a race to the bottom around what people are prepared for decent connectivity. And if you have a Wi-Fi hotspot, it needs to still connect into a backbone. Who's going to pay for that backbone? And one of the downsides of what's happening in telecoms is we all want, you know, 60, 100 gig fibre, but who's going to pay for it? And I think that's not the same in the banking disruption, because as Jason's company is doing, is it's setting out to build its own infrastructure, and which is possible, but it's very hard to build a national connectivity network. So I think the problem for the telco industry and for society in general, because digital connectivity is like a national asset, like your road network, like your health system, it's becoming that important. But people won't pay for it. So who is going to give us and invest in that digital infrastructure? Because it's got to be. But banking, you can build, you know, new technology. So I think it's almost the disruption is going to be bigger in financial services, because we still haven't seen that Kodak moment in telecoms. All the main providers are still there, because you can't actually replace that network, because even if you've got drones, they still need to connect into a backbone.
But do you think the risk is that, you know, only owning the backbone, you lose the opportunity to engage and speak to customers, cross-sell, upsell?
Of course, but there's still a lot of money in being a dumb pipe. So I think that this kind of disruption thing sometimes overplayed. And like I said, all the main players in telecoms are still there. Their revenues are declining massively, and that moment is coming. But the same barriers do not exist in financial services, because Mondo can build, or is setting out to build, its own rails, its own security, its own AI, whatever the hell it's setting out to do, in a way that can make it self-sufficient, I suppose, is what I'm saying.
I always worried about that. When Google Wallet came out, that was the first thought that came to our mind, that was going to be a push towards making the banks become a provider of an infrastructure through a relationship management tool delivered by the likes of Google, which were willing to charge nothing for it, because they would use that data that was generated at the point of sale to compensate. They would convert a cost per click model to a cost per action model, therefore wiping out interchange. So we thought of it at that point. I think if you talk to the banks, so the majority of them believe that that is not possible, because customers have a relationship with the banks which goes beyond the provision of services, is based on long-term relationships, based on the physical branches, but based on an element of trust and belief that their money is safe with the banks. I think that may have been true in the past. I think that is getting very quickly eroded. And the regulator is playing a very, very proactive role in doing this. One is promoting the new banks, but also constantly telling you that your money is safe also in other places beyond the core bricks and mortar banks. So I think the challenge and the risk of becoming a utility is there. But the same as Lee said, there is possible to create a business model that makes a bank decide that they will sack all the front-end people and just become an engine for Google and Facebook and Apple.
I've spent time with these guys, I've spent time with innovation teams of the big banks, and there's nothing we're aiming to do or have come up with that other people haven't come up with in the last few years. There's no secret sauce on the new digital banks. You know, there are phenomenally clever guys who've come up with exactly the same thing. It's all about execution. And actually, when you look at the kind of startups who are cutting off small chunks of that user journey, you know, whether it's Venmo and payments, or whether it's, you know, peer-to-peer lending or whatever, you can get the kind of banking of the future experience if you sign up to like 15 startups and, you know, use lots of apps at the same time. So I think our view is that the right size of bank isn't dumb infrastructure, although there's an interesting question as to whether the big banks provide medieval plumbing rather than new plumbing. But it's about where you get to the point where everyday money and that sort of vital utility where your salary check is paid in and you manage the glide path down to the end of the next month, spending, saving, putting money aside, sending money to friends, doing all of those things that you do day to day, whether that can actually be a single platform, and whether that kind of experience of a small, very focused, integrated sort of everyday money view is really the right size. And that's what Mondo's aiming at. We're just doing a current account with some overdraft lending. And there are plenty of people out there who are great at mortgages or great at peer-to-peer lending or TransferWise and everyone else. And there are APIs to connect into that. So we're aiming to be that everyday money, right size of an experience in order to deliver for customers, while not overstretching, while not trying to be everyone for everything and being that sort of mega bank.
I think people are sort of overestimating the impact of some of the sexy stuff on banking. But really, Bitcoin is not going to overthrow the Bank of England, and APIs, boring technology, IT stuff, actually are going to restructure the way the industry works. So the changes in the dynamic of the industry over the next relatively short period, I think are going to be much greater. I'll give you an example. We have an office in New York, right? So I'm in the States a lot. I wanted a bank account while I was there, so I just got an account with Simple, and it works great. I'm very happy with it. I like the app. I like works absolutely fine, right? Simple is what you call a neobank. So to the customer, it looks like a bank. I know it actually isn't a bank. In regulatory terms, it's not a bank, right? It's a front end, and you've got Bancor sitting underneath it. That's about to get switched to BBVA. I didn't care it was Bancor that was providing the account services. I won't care that it's BBVA providing the account services. I'm very happy using Simple. Lots of different apps really isn't a big deal. Like if I walk into Tesco and my Tesco app opens, or I walk into HSBC and it's fine. It's not a big deal to have different apps that do different things when you go into different banks, and I don't really care, to be honest. And those apps, which can be very specific and deliver great service in certain, to be honest, that's actually quite hard to compete with, right? So the vision, I think, is probably a little... what I'm imagining is I go into Tesco, I decide, I do want that big screen telly. I go to buy the big screen telly. The Tesco app, Apple Pay, these people all know I'm buying a big screen telly. It's that nanosecond when that's auctioned to the providers, and I get a thing on my phone saying, do you want that now, or do you want to pay in 12 installments over... To me, that looks like a Tesco service. Under the hood, yes, it's coming from all these different people, and I don't really care. So I think if anything, you were underestimating the impact that's going to have. Because when providers have direct API access to the accounts, banks are really going to have to fight to provide some sort of service. And also, just one tiny thing. Remember, what you're imagining, which is correct, is that the day after the PSD2 provisions on API access go live, I'll get an email from Apple saying, oh, by the way, there's no need to bother those nice people at Visa and MasterCard. We'll just get the money from your bank account. Is that okay? Oh, by the way, you get an extra 3 months... what's it called? Not iTunes. What's the thing called? The streaming thing. And everybody will hit OK, right? You'll get a thing from Google. Is it okay if we just... Everyone will hit OK. I should be getting a thing from Barclays which says, can we have a look at your Lloyds account? Because I'm sure we can do you a better deal. And that's not happening. So right now there are people at Google, I'm guessing, who are working out what we're going to do when the API goes live. No one at Barclays is thinking about this sort of stuff. So it's going to be, I'm saying it's going to be, the boring technical back-end stuff about APIs is going to be a revolution. And the sexy stuff about Bitcoin and whatever, whatever.
I remember when Amazon came out, there was an interview with the CEO of Tower Records. And he said that he wasn't worried by Amazon because the user experience in the Tower record shops was so superior to anything that Amazon could ever provide. You could talk to somebody that tells you about the music. You could go from one product to another. You could go through different CDs, but you can also buy VHS tapes, and you could buy tickets, and you can buy T-shirts. How else is that going to ever be replicated? Well, again, lo and behold, there's 4 different businesses that have eaten Tower Records up, and Tower Records is a nice memory in some people's mind. So I'm not saying that that will happen to the banks. I think that that could happen to the banks. And I think banks need to start thinking about a world where they will need to fight for their customers and not just assume that they're going to be there because inertia will stop them from moving around. It's not about the blockchain, about Bitcoin, about this and that. It's about the fact that customers are now comfortable and confident to use their money in places that is not a bank. And that's what's going to be the future.
We've all done great projects which haven't gone anywhere, and there are people thinking about these issues in Barclays, and I'm sure all the other banks. The problem is implementing them and actually making them real. And when I first joined Barclays, I'd never worked in a bank before, never thought I would work in a bank. And so you look at business banking.
Would you work in one again?
Maybe. Would have to be, extraordinary, the right circumstances. But you go in with, a beginner's mind, I suppose, and you look at something like business banking, look at the opportunities there, and you go to the group MD and you say, we can do this, we can do that. I was so naive. And they're like, you don't know, how does any of this help me with the problems that I have today? Right now, and your team can turn into a distraction and a nuisance. So it can be things like, are you aligned with their priorities? And people are incentivized in the wrong way. Corporations, not just banks, are not used to working with ambiguity, right? They want to know everything, and they're not used to working in agile, and they're trying to, but they can't do true agile because of its very nature. It's very hard. And successive CTOs, CIOs have deferred infrastructure decisions, and now making those changes is really, really hard. So, as you said, it's to do with people and culture and technology, and it is really, really difficult. But, if you look at the top brass at Barclays, for example, Michael Hart, the COO, he totally gets it. He totally gets it. Derek White, Chief Design Officer, totally gets it. But there are tens of thousands of people in those companies who either are very comfortable with the status quo or don't quite see it. And it's that, what do I have to achieve in the next few months? And making those long-term changes is really difficult.
I want to make one little point, because you're right about that incentives thing, and I'm not. I mean, I understand people operate and they respond to the incentives that they're. So I'm not criticising, but I think that's quite a strong point, because
it's not the only force.
No, but it's a very human force. It's like,
yes,
my
exactly,
Christmas bonus comes from, like, I'm the ATM guy. My Christmas bonus comes from the ATM network staying up, right? I couldn't give a monkey's about if I'm going to save you money on some internet banking proposition, right, or if you're going to improve the uptake of I don't care, because if the ATM net goes down, I get bollocked, I don't get my Christmas bonus. I don't care about the rest of the thing. And you can't criticize people for that, because that's a really human thing. It's just the way it's structured. Yeah. And so I agree with you, it's a real problem, but I can't see any obvious way out of it.
Because you've got an organisation which is 180,000 people, and this is not, this is everyday life. We all experience it. Everything from ego, not made here, what are my incentives, combined with technology restrictions, make it really hard. But it's not they don't have the ideas. There are fantastic ideas and solutions sitting in Barclays, in Lloyds, in HSBC right now, but they're sitting in a hard drive somewhere, undiscovered, or they've been presented and the group MD says, well, that doesn't help me shift current accounts today, when your idea is you don't need a current account anymore because you should have no dead money and your money should be actively fluid.
When smartphones came out, iPhone came out 7 years ago, everyone was downloading every app, and I did a lot of digital sort of proposition work with large corporates who can't get people to download their app. Tesco's, Sainsbury's, Nectar apps, people just aren't downloading them. People are solidifying on a very small number, that home screen, maybe a couple the screen afterwards. So there's very much, I think, a comfort and a convenience element. And actually, people talk to us about how, what are we going to do in order to kind of take on the big banks? And that's not our prime concern. It's you guys. It's end customers. Because actually at the moment you're given this, smartphone with the equivalent of a kind of 1980s cash machine, what your balance is, some little chronological list of charges, your electronic statement. And then you have to work out everything yourself.
But that's because the app is using the ATM interface
Totally agree.
to query the core banking.
Totally agree.
You've got no API access to core banking.
I agree.
It's not exactly that. It's that the people who approve the design are people who are using the ATM.
So in the end, you look at sort of the modern banking app, and it's not about solving the problems we have, every day, about the managing the money that you have, about moving it around, about someone looking after you. You're going to run out of money. Your Eon bill this month was 30% higher than it was last quarter. All of the stuff that if you had a personal assistant, would help. I was at a conference this week, and someone said 2 generations ago, banking was better than it is now. That actually we've gone from that kind of bank manager who knew where you were in your life, so-and-so's gone to school, you need this. No?
It's a myth because the expectation was so much lower less than 2
Okay.
years ago, and that's what it is today.
Yeah,
The
all the
expectation you have
shots
from a
Wednesday.
bank is
Okay. Good one. So, but I think that there is a technology today allows us to move to that personalised, intelligent experience rather than factory banking.
So two very quick points. The point about the apps is, I'm saying hundreds of apps, but for each individual person, it's actually not that. I can't remember the statistic off the top of my head, but for the average person, 90% of their disposable income in a month goes to, I think, 5 places. So like on my phone, if I've got like a Waitrose app, a Co-op app, the Shell Garage app, basically that's most of my money. You don't need hundreds per person. It's sort of hundreds all around. But just the point about what it would actually do. So if it's possible to use technology to deliver that kind of useful advice, or you're going to run out of money, so you need to do this, that, and the other. Well, I don't understand what that's got to do with the bank, because I'd lay a pound to a penny that Apple or Amazon or whatever will do that better. And so then they'll say, oh, by the way, if you're going to buy this, you're going to run out of money, so you need a little bit of a loan.
The only reason they don't want to do it is that regulation is so much of a burden. If somebody's already dealt with it, let's work with that.
A very simple analogy. Many years ago, I worked on a project for AT&T in the US, which was for General Motors, right? And this was to do with auto financing. So you go into this was new in those days, right? So you go into the car dealership, you go to buy a car, you fill out your name and address. Why did you like that car? And what the system does is it looks to see if you're a good credit risk. And if you're a good credit risk, GM finance the car for you on the spot at 0% or whatever. If you're a bad credit risk, they direct you to the nearest bank. That's exactly what's going to happen in this, but not just for cars, for everything. I feel quite strongly that the challengers have to have a different, I hate to use the word in front of designers, but they have to have a different narrative. The challengers have got to have a different story, right?
I'll give you a different narrative.
But you see why I'm challenging.
I do.
Yeah.
The point I'd like to make, though, in all this is just also to shift the conversation or add this idea that actually, in terms of winning, it's not just a technology play, and a lot of the discussion is about technology and so on and so forth. And we're kind of in this phase where, you've got a bank, a high street bank, and now you're putting that on a phone, and I can move my money around and check my balance, this kind of stuff. Which, in a way, in the early days of digital publishing, you take a newspaper and you just whack it on an iPad, and that's largely missing the point. So we live in this amazing period where there is these social time bombs waiting to go off around ageing population, youth unemployment. You look at what happening in Greece. So what's worked for the last 300 years around money and value exchange and the idea of work and people living longer. There's going to be all kinds of social change around, bartering and how people make money and how people share resources and all these kind of things. So actually, once we've got through the thing of I can pay for this, I've got a good seamless customer experience, so on, everyone will be providing that. And actually, the people who are going to win are going to figure out what money and financial services and the purpose of a financial organisation in this kind of new world that we're moving to, and that's the fundamental, and that's not about understanding technology.